So, thank you for the introduction. Good afternoon, everyone. And we are going now to talk about the largest adjacent market to Turkey, European market. In our discussion, we are going to, first of all, to set up the framework, then dig into details of economic trends, which we can observe from the market, then going into specific steel industry developments. And there is the third part, which is policy and regulation part, which is also very essential. I'm just touching this topic because, as I see from our agenda, it is going to be further discussed by the speakers who are coming next after myself. So, in this presentation, we will have a lot of cross-references to the data which was already discussed in the section related to Turkish market development. Basically, we are operating in the same field, and it will be interesting to see that, first of all, we have a very close correlation between all economic developments and steel market growth. So we see that, interestingly, the economic growth dynamics is defining the steel market dynamic. Unless the last year we had quite reasonably high for the European Union growth rate of 3.7% in GDP, the steel market decreased. Steel market decreased, and we can observe more than 7% decrease in the steel demand. And we will try to research this in the economic patterns of what is going on behind those developments. But you see the very close correlation. So if you would just straightforward calculate correlation factor, it's 0.73. So it's high. This is a world we lived in the last 5 years, and this table is combining forecasts for the economic developments produced by International Monetary Fund. It's interesting to read through the global context, which are effectively titles of the outlooks which were produced by International Monetary Funds. And we will see in the later slides how manufacturing downturn is effectively impacting this downturn in industrial sector consumption in EU. So it's interesting to once again to see this unpredictable April 2020 forecast where there was no outlook for the next year, and the way how we are now entering the phase of rocky recovery. And as you see this from the European perspective, the European outlook, it's the first point since start of the war in Ukraine that economic projections are getting more positive. You see certain balancing between the years, because actually, if we are going to see higher growth rates in 2023, they can be smaller due to the base factor dynamic in 2024. But I would see this as a very positive turnaround point when the future outlooks look more optimistic. And in the next slides, we are going to see why. Because those parameters, very often, they're behind the scene. I'm presenting those charts not to give a forecast for certain indications, but to show the world in which our industry and market will live in order to achieve the defined growth rates. So basically, in those charts, it's nothing more than assumptions which are laying behind the model, which are laying behind the IMF model. And what we see, because this is also indicating the past trends, current trends, and expected future dynamic. First of all, inflation. There was a very interesting chart for the Turkish steel market about high inflation rates. For the European Union, In average, it was not so high, it was not double digit, but you see that 9.3% inflation rate in 2022. It was really a high one, and it was like in several times higher than projected by the policies of the European Union, where healthy levels are stated around 3%, 3.2% precisely, as far as I remember. And this year, we are still in the period of high prices, in high inflation. But you see that for the next year, the model of economic growth, the expected economic growth, which we discussed in the first slide, expect slowdown of inflation to the levels below 2021. On the other hand, there are projections in the growth of wealth of people in the region. There are several indications which we are operating. One is current price indication, and another one is constant price indication. So we are talking about this constant price indication for GDP per capita for the next years as a quite reasonable. So this expected to be with already deduction of inflation. So people are going to be richer in the region overall. There is a third parameter which is impacting effective economic performance, which is exchange rate. There are two lines, and in the second line it is written that it is not something which is once again forecasted, but you can assume what is behind this set of economic forecast, just dividing nominated indicators in US dollars and local currency, which are in euro. And you see, and from this you can see, are those judgments in line with your vision or not, because 2 slides later there will be also a background discussing European Central Bank view, and it is different one. Because from this view you see that this $1.06 per euro rate is effectively not in line with the current situation. And what we would see later is that the world in which European Central Bank and European Commission live, it's slightly different. It is 108 indication. It's also interesting that European Union, in this case it's European area, are facing a certain scarcity in labor resources. That was a little bit surprising for me to learn that unemployment rate is dropping below 7% in those outlooks, which you see this from the past years. It's below the levels which we observed from the market previously. So the next one is relevant to the steel industry, because what we also see from economic trends is energy cost dynamic. Here it is represented by thermal coals. We have seen from a presentation of Siryk how metallurgical coal market behaves. And what is takeaway? Takeaway is that the same high prices for energy are not expected for the next years, unless we are talking about natural gas. Because if you take a look, natural gas is expected to remain high, but much lower than in the past years. From my side, I hope that this would also reflect electricity prices, which we also have seen from the last year. They were highly affected by dynamic in those raw materials. But as you see, economic forecast anticipates that energy prices will be lower, natural gas prices going to be lower than in the last years, the same with crude oil. So in this part, there should be, industry should face lower costs. There is also part which is related to metals. And as you see, and this would be dramatically different from the projections we could have observed in 2019, 2018, when the most agencies forecasting iron ore prices, they were expecting decrease in iron ore price, and this expected decrease was close to $70 US, $75 US. As you see currently, the world looks much more balanced. And there is no big anticipation in drop of iron ore prices. Regarding the discussion for alumo-zinc or zinc-aluminium alloys and so on, we see that the drivers for aluminium and nickel, they are slightly different comparing to zinc metal drivers, at least what is expected for the future developments. And the economic outlook anticipates decrease of zinc prices and at the same time increase of aluminium and nickel price for this. So this is the world of this rocky recovery. But there is also a set of other factors which are not tracked on this like global scale for European Union. But what is also important from internal monetary policy. So first of all, which is very important for any distributor, any trader, money is not anymore a resource which is available in unlimited quantity in Europe. So we see that cost of capital, cost of money increased already the last year, because in the past several years we have seen negative interest rates in the market. And this situation is expected to remain. So we currently live in, for Europe, it is quite expensive capital cost, more than 3%. Another point is, which I would describe as a downside risk factor, is emission cost. It is ETS price. And since several years, it is also forecasted, because it is going to be much and much more important factors for the future development of European Union, which is, in my opinion, currently is the most active global player in the area of green transformation. We see that the outlook, which is based on March figures, anticipates increase in ETS prices. And on my personal opinion, it's quite, I would say, conservative view on the price development, because already in Q1 we have seen in ETS trades that price was already exceeding 100 euros. And this 101 I would take as a, I would say, indication that the price is going to be higher. And of course, financial indicator, we see that unlike situation in Q4, when US dollar was valued higher than euro, currently we are in the period of, once again, of higher euro cost price versus value versus dollar. And what I, as an analyst, can anticipate from these figures, when I could just catch up, is that there is no real idea for the dynamic of exchange rate. Because the same as you have seen this from assumptions of International Monetary Fund, the same as you see this from European Central Bank, it's basically based on the last available figure. So there is no vision how future dynamic of US dollar euro exchange rate going to develop. Meantime, steel industry is transforming very fast. For myself, I was curious to see that the framework remain, basically. So we have some key ratios which are quite stable, but below, underlying framework is changing significantly. And as you see this from the factors, we can split them in three major groups. One group are material properties, so which is related to material science. And we see that in all key consuming sectors like automotive, general industry, construction, there is a clear intention in the development of new products and development of new properties of existing products. We have never calculated this, but very often there is an impression that if you would remain in some 20 years ago, 25 years ago, steel grades, the consumption would be really higher, because very, very gradually we see how world from base structural grade S235 is developing to the higher application of higher and higher grades. And we should not forget that this effectively means that structures are going lighter. And in this specific case, we are talking about like 20% already difference. So, which also indicates that for future projections, for the same amount of structural works, construction works, might be smaller amount of steel required due to the properties, due to the technological developments. There are also substitution cases. That was a reason also to pick up other material prices, because it's always a dilemma between weight and cost associated to this. Talking about other groups of factors, supply chain as a big group is essential trend in the dynamic, and there are two sub-trends. One sub-trend is what we can observe from COVID-19 dynamic. It's a question of supply chain location and relocation, and we will see this later on. What does it mean in case of European Union? Because the slogan "Back to Europe" exists, and from my personal experience, this as a factor is taken by many players. Like several weeks ago, there was some closure of one of automotive plants in France due to the lack of gearbox parts, something like that. And it already raised numerous questions. Is it once again we are back to some interruptions of supply chain? Can we observe the same for other locations? So it is producing a lot of questions. So this is what is meant under this physical location of supply chain. So people would like to make sure that there are not anymore left parts produced in Mexico, right parts of the vehicle produced in India. So just to make sure that it will be possible to assembly at the end some part of vehicle. And second sub-trend is supply chain formal requirements, because this is also which is getting very essential in this green transformation framework, because the question of transparency, traceability, it is getting really a big issue for the industry in the European Union. Like locally, we can experience that with every purchase at Amazon or eBay, you can check already what CO2 footprint you produced with the purchase. And the same we can observe also for the steel industry, because steel industry also calculating this already, starting these calculations to show, what material, which supplier is producing smaller footprint, also in these frameworks. And it is also legally required right now by the governments to show, in this KYC concept, to know who is your supplier, what is general ESG framework of the supplier. So this is also very essential trend from the European industry. Now getting closer to this intersection between economic and steel consumption. We see that European economy, there are no really shifts and big changes, but you see a very, very gradual dynamic in the development. That is actually the reason why we are not skipping years to show the big trends, because in the last years this could be misleading, because talking about pandemic situation, all the things, there is a risk always to skip some of essential trends. Therefore, we really go year by year for the past and just showing what is expected from the economic forecast for the future. And you see that there is a certain geographic shift in this case towards east. In this specific case, there is a regional classification used by United Nations, but if you would, for example, include the Baltic states, you would see in Eastern Europe growth rates, which we also could observe for the Turkish economy for the last years from the presentation of the colleagues from the first half of this section. So we are talking about, in average, future outlook of more than 6–7%. And you see this shift. So back in Europe quite often means that it will be back in the different regions of Europe than we have seen before. This is another point which once again shows a quite stable big level picture. So this aggregated picture, you see this from the segments. It's breakdown of gross value in the European Union. And you see despite like 2020, clear there was like a higher share of public administration, lower share wholesale retail trade due to the lockdown was there. But generally, it's quite similar structure, which you can observe based on also, you can project also economic growth. So it is not stable economic situation. The economy was growing, as you have seen this in the first chart, but the structure of this growth, the drivers of the growth, they basically remain. But what is behind? So we have taken two measures. In the first half for Turkey, we have seen like apparent steel use, and in this case we are taking finished steel equivalent, and also GDP intensity in terms of how much steel is dedicated to every GDP dollar. So the two projections. One of the first observations is what I picked up from the global situation from Tat's steel presentation, was that basically Europe on the global average of apparent steel use per capita. There are fluctuations in this dynamic, and in the next slides we are going to see what is happening once again behind this generally stable. But the overall average for region is quite stable. So there are ups and downs, but in the average it is all around 300 kilos per capita, around this. The same for steel intensity, with one big difference. Population, as we have seen for Europe, we can take stable for this perspective. So there are no like big significant changes in this case, but GDP was growing. And there are certain cycles, and if you would just connect the title from 2019 Q4 outlook, talking about global manufacturing downturn, you effectively see this downturn in terms of GDP development, in terms of intensity of GDP growth in the region. But once again, overall picture is remaining in average quite stable, and this stability is beyond this once again redistribution to other regions. So for this charts matrix, we are comparing growth rate. So this is past looking indication. So that was the development of country markets from 2010 to 2022. And on x-axis, we are talking about market size. So you see that Eastern European markets, they are mid-size or large markets. Also, please put attention to the breaks in the scale. So it's that you are not mixed, to not have those large charts. They are a little bit like compressed, condensed, because Germany is the biggest European markets, but you also, what you see in the picture is that Poland is catching up as the biggest European market with Italy, for example. And we are going to see this also in the next slides. Due to the different product developments, as an example, for polymer pre-coated steel, Polish market is already larger than the German one. So now not Germany is the largest PPGI market, but Poland is the most active one. And you can also see clearly this migration from the steel demand from the Western Europe towards Eastern Europe in both directions, per capita and in financial terms. If you take a look into the flats and longs ratio, which is very often is explained as a type of economic cycle, because in many emerging markets, we see a higher ratio of longs due to the construction activities, and in more mature markets, there is a higher ratio of flats. And this is exactly what we see from Europe. And for me, this sum up was a little bit unexpected, because I expected to see that ratio of flat products is growing due to the substitution, for example, substitution of welded structures against road structures and all the things. But effectively, the general European picture remains very, very stable, despite significant changes in the dynamic. So this means that one of big niche segments in longs would be a special bar quality segment. This is roughly for European Union 7 million tons. And as a result of the electrification development, electrification trend, basically it can halve already by 2030. Because for battery electric vehicles, there is no need in gearboxes, there is no need in internal combustion engines, so intensity of this use is like smaller. But we don't see it from the dynamic yet. We see already in 2022 how cars, automotive landscape changed in the region. So we see that if you even compare with 2018, when other types of drives were absent from the market, we see how brightly picture has changed already in Europe in the last like 5 years. And for the products, here we pick up example of coils part. We see that overall trend is towards higher share of coated material to face the requirements for sustainability of construction, sustainability of structures, sustainability of GDP in general. So there is a shrinking part of uncoated cold-rolled products, which are replaced by galvanized products. And once again, in their turn, it is also a trend towards higher share of PPGI material in this market. So there are a lot of trends already on the micro level of specific product development, specific product crops development. And another point which can be maybe difficult for this discussion, because I know that Turkey got impacted by safeguard measures. There were several disputes between Turkey, between European Union about the case. And my personal position is that I don't support any kind of distortions like this in the trade. But in the next chart, we see that probably this is one thing which we should tolerate in this case. Because first of all, we see that a share of import in the market supplies, it was growing quite significantly, impacting the market. And on the other hand, safeguard measures which were implemented in 2018, they are not significantly impacting the market. We see that for the long supply, longs typically is less marginal product than flat steel products, at least in the last decade or so. So flat products much more reasonable for trade transactions, so they remain and even increase their share in the market supply in EU. Therefore, we don't see like this big distortion. On the other hand, as kind of my critics towards this is that just checking on a monthly, on a weekly basis, some quota, utilization, and so on, we see how those measures, they are distorting procurement policies of the customers. How are they distorting like general flows? Because as soon as there is anticipated scarcity of the material, people are trying to buy or to book more material in advance in order to fulfill future developments. The market is getting much more volatile than in the case when material would be available all the time in required quantities without any kind of stress, if there is a quota, if what is the lead time, when it is arriving, and so on. And the third part, which is summarizing both things, is this green transition. Now I got it. You see that Europe is the most ambitious region towards green transformation. We can criticize or not criticize the development. And for myself, several years ago, I would not believe that it is really happening, what is happening. we can doubt how efficient this policy could be in the world when Europe is contributing less and less from all the years versus other players are contributing more and more, and this reduction in contribution from European Union is not even compensating increase of CO2 emissions in the other parts of the world. But what we see from this transition is that it's a kind of an experiment which should show the future path for the global development of the steel industry. Because it's a significant contributor of industrial CO2 emissions. And basically technologies of steel production and recovery from oxide of steel, they require the same quantity of energy as maybe even 50 or 100 years ago. So technologies, they are not changing dramatically towards this. And the European Union is currently attempting to change the landscape. And why we take it as a current trend, because it is effectively what is happening right now at this point. We are going to see this just in several years. What would be the outcomes? Because the first outcomes of the pilot projects which are using hydrogen, what would be share of hydrogen and UDRI units and so on, we are going to see in 2025, 2026. Industrial scale, like closer towards 2030, 2032, but there is intention on the general political level and also commitments on the corporate side to decrease the emissions. What is going on right now is that something what I describe as a optimization of the existing technology, because of course there are many things which mills can do in order to minimize CO2 emission with existing technology. And basically the commitments, honestly, they are really in those frameworks. So the steel companies, they are committing something that they can achieve shifting towards pellets from fines, shifting towards higher scrap contents in the charge, and all the things, using top gases, all the things. So it is feasible. How feasible breakthrough technologies which are currently implemented, we are going to see in the next years. Because for the moment there are some pilot plans, and so in my opinion, the quantity which allows to show how handleable hydrogen through the process, they are not representative because the quantities are small, and how this will be affected on the industrial scale production level, we are going to see in future. But of course, coming back to the restrictions and as introduction to the CBAM mechanism, of course, one part of the mechanism is ETS prices are already there. So basically there is financial incentive for the company. So it's not anymore just a pure cost. It's a part of financial calculation for new projects, this ETS price. And second part is that, of course, this need to get financing. Therefore, the CBAM and other restrictive mechanisms is a kind of necessary evil, probably, in this case, which are distorting normal situation. So we have seen that there are many interesting macro and micro trends in the industry which are happening in the triangle of economic drivers, regulatory framework, and demand patterns. So we see some positive signs from the development. Hopefully they will sustain. What is also expected from the future outlooks, at least how macroeconomy looks like, is stabilization of cost factors and inflation in the next years. At the same time, higher cost of capital, higher ETS costs associated with environmental policies can produce downside risks. And using segments, they are integrating the requirements of regulatory, once again, framework, and also trying to utilize as much as possible developments in the material science. So this is changing significantly landscape of the industry, customer requirements, and future development. We see shifts in the geographic distribution of steel demand, and it is moving towards eastern countries belt. And we also see that this green transition is a big point which will define a lot of things which are going to happen in future with the European Union and hopefully worldwide. Thank you for your attention, and I would be happy to answer your questions.
Thank you very much, Alexander. Any questions from the floor for Mr. Siryk? Mikrofon alabilir miyiz lütfen ön sıraya?
Thank you very much for the thorough explanation of the developments. I have several questions, but I'm just going to ask one, which involves one of our facilities. I've noticed that you're saying iron ore is going to be pretty flat in terms of prices over the next 5 years, about $100. You're forecasting aluminum and nickel to go up. I mean, okay, it's at peak, it's going to drop, but it's going to eventually go up. But for zinc, you're saying the price is going to go down, and it's going to stay down.
That is where I need once again to put the point that it's not intention to the forecast. It's not the forecast. It's a term to match economic outlook. So this is what is behind the economic outlook. So this is not what we are forecasting. This is what is taken into consideration as technical assumptions by IMF. If you would ask me if I believe or don't believe in these prices and is a forecast model, this is not intention. This is to describe the world where European economy is growing 0.8% this year and 1.6% next year. So this is a world what was taken into consideration by IMF in order to give this outcome. So basically what they see as underlying developments.
Okay, thank you.
So I would not talk about forecast because for these specific cases we really need to consider many factors. And finally, that was not intention.
Thank you. Any other questions from the floor? None, I believe. So thank you very much.
Thank you.
Alexander.